Hi, everyone, and it's good to be back after my break. I had a wonderful vacation. I hope you guys had good trading weeks. I left you on consumer staples, which rocketed while I was gone. So hopefully that helped some of you out to make some money during what otherwise was a very choppy market. Anyway, since I've been back, I thought it would be really interesting, since I've been asked a lot about this and it's been making headlines, is the debate between Cathie Wood and Michael Burry. And if you don't know who Michael Burry is, he is the guy who the Big Short movie was written about. He had predicted the mortgage debacle. He had a huge short position on in the markets. He sat through some very deep losses until finally he hit the big home run. Some will say that he basically since then has had a terrible track record, but nonetheless, he's come out very vocal against Cathie Wood and her ARK fund. And that's because he believes that inflation is going to take hold, number one. And number two is he just feels that she's way off in terms of her timing on the disruptive technology. Cathie Wood, if you don't know who she is, came to fame really basically about 5 years ago when she started accumulating shares of Tesla. Last year, her fund was up really huge. I think it was like 80% or something like that. Might have been higher. I don't have those numbers off the top of my head. This year, though, with some of her holdings, which she continues to buy down, although she has taken some off the table, including some of her Tesla, she's actually down on the year, over about 6%. But considering how much she was up the last year, it really doesn't make that much of a difference if you were with her fund from the beginning. So I thought, let's actually look a little bit at what they're doing. They're being called the unstoppable force and the immovable object. Not sure who's what. I would have guessed that the first one describes Wood, the second one describes Burry. So Wood, as I mentioned, she's all about disruptive technology. She doesn't believe that there's a bubble. And her top 5 holdings make up over 50% of her portfolio. So she's very heavily weighted into these stocks. We are going to look at them. Burry, on the other hand, is short Treasuries. He's short Tesla. He's short ARK, which is Cathie's fund. And he sees inflation coming, and he is holding a few longs. So we're going to explore all of those. And here's the symbols. The top ones represent Cathie Wood's holdings, and the bottom row represents Michael Burry's holdings. So let's get going. All right, so here's the charts. Thank you, StockCharts, for such a great platform. And as always, we're going to have on here, I'm not really sure why I'm not seeing the leadership part, so we're not going to deal with that right now. We'll just deal with the real motion indicator and the actual price charts along with the moving averages. So this is Tesla. I'm going to show you Tesla from 2 perspectives, from Cathie's perspective, and then we're going to take a look at it again later from Michael Burry's perspective. So in order to look closer at Cathie Wood's perspective, let's take a look at a weekly chart so we get a little bit more information. Now, if you look at a weekly chart, I mean, let's face it, she's been holding this stock for years. So her average price is pretty good. However, I know she's accumulated some higher. And I just read recently that she also sold a whole bunch at 721. She actually reduced her Tesla position by about 6 or 7%. Nonetheless, if you're looking at this weekly chart, here is the 50-week moving average. So until that breaks, that certainly would support Cathie Wood's long position because it is holding in an uptrend. If we go back to the daily, let's make this range a little bit wider. If we look out at a year here on the daily, you can see that we had a death cross here. Looks like we're about to have a golden cross once again. And I wanted to look at the momentum because, you know, that's really interesting to me. This is our real motion indicator. And you can see the momentum is just barely holding on the 0 line here underneath the Bollinger Band and underneath the moving average. So it's vulnerable, particularly if it breaks down under this 50-day moving average. Now, I don't know if Cathie Wood and her cronies actually follow the charts as carefully as we do, but nonetheless, if it gets through 700, I would say 1 for Cathie. If it breaks down underneath all of these lows here, particularly 650, which was the low of this week that I'm talking to you, then we'll give 1 point to Burry, because there's a good chance this might get down all the way back to 550. And if you were interested in playing along, that's how I would do it. I would do nothing here in the middle, possibly short on the breakdown of the moving averages, and possibly buy over 700. Cathie's also very long Roku, the streaming service. Now, this is also, I'm not sure what her average price is. I didn't do that investigation, but it doesn't matter because we're looking at it as fresh trades for us. So we do have lots of topping action up here. You see a top here and then a top here. So if we're looking at that as a potential double top, right now, Roku is actually broken down under both the 50 and the 200-day moving averages. However, we do have the possibility of a new 60+ day low that was put in on Thursday of this week, the 19th of August. And it has to confirm, though, which means that this would have to close back over 352. If it closes back over 352, I don't know if I'd necessarily be a buyer, but I would be interested potentially if it got back over here over the 200-day moving average of 362.63. And then, of course, you would have a pretty clean stop underneath this low. But if you look at the momentum here, the momentum has been going down and is under the zero line. That's why I would be a little bit more cautious on the buy side. I'd want to see this at least get back through the zero. So there's Cathie Wood's second biggest holding. Her third one, which we actually have some skin in the game as of actually the day I'm talking to you, is Teladoc. She's got to be underwater here because you can see that this thing has, since September, October, November, and the beginning of January, sort of peaked out. However, I think that this is an interesting stock because we have a situation now with COVID and the variant where Teladoc is basically online consultation with doctors. And so people were starting to emerge going back to the doctors. I know my personal doctor is going back to doing more online consultation, unless it's something really serious, in which case she's sending people off to the hospital. So if you look at the momentum here, what's interesting is that it's not great, but it is improving. But we're buying it on the basis of the fact that it made this new 60-day low here, confirmed this day, came all the way off and never took out this low. So under 133.25, we're wrong. We got in today based on the opening range breakout. I've done a whole video for you guys, an evergreen video on how to trade the opening range breakout. So I suggest you go back and look at that if you want to see why our entry. Our stop, of course, is under this low, and we'd be thrilled if we can get a move up closer to 150, 153 to take our first profit off the table. The good news would be that we can get that move. The better news would be that we take out this 50-day moving average and we see a move maybe closer up to 170 or possibly even higher. So this one we have good hopes for, but we bought a small position. So Cathie, I'm not sure if she's bought more, but anyway, I do think as a disruptive technology, she's certainly not wrong. The market sells off, then of course Teladoc with everything else will sell off. She's also holding Square. Now, Square, of course, is also somewhat tied to crypto, and that's doing a lot better right here. You can see the slope on the 50-day moving average is up. You actually can possibly look at this if you were interested in getting in. I'd probably say I'd wait for next week to see how the market does. But over 267.50 looks pretty good with not a bad risk to under the 50-day moving average. But the reason why I'm saying I would wait a little bit here is because if you look at this Bollinger Band, we'd like to see at least this clear the 50-day moving average, and even better yet, the Bollinger Band here. Now, moving on to her next fifth biggest holding is Zoom. Now, again, not sure where she's long Zoom, but I would imagine she has to be underwater with this unless she was accumulating it on this dip here. Now, Zoom also made a new 60+ day low on Thursday and is confirming that today. It is in a distribution phase right here. And that's because it's under the 50 and the 200, but the 50 is still over the 200-day moving averages. And we come here and look at the momentum. It's also still weak, but maybe possibly getting some kind of divergence. And by a divergence, I mean, we'd want to see the momentum start clearing both the 50 and the 200. If that happens long before the price does, then this actually could have some resurrection. And of course, from a fundamental standpoint, even though the only real shutdowns I've heard about right now have been in actually Australia, who knows what could happen? And of course, I still think Zoom technology is here to stay, but it wasn't quite nearly as popular as it was during the height of COVID when everybody was doing Zoom meetings. Okay, so now just quickly go through the rest of some of the ones that I thought was interesting. She's very bullish in crypto, as am I, and she bought coin. Now in coin, I think she's doing well because I think she bought coin on the IPO, but I think she added to the position. So at this point, since it's a new issue, we're just now seeing this 50-day moving average, and it went right to it on Thursday and is popping from there, along with Bitcoin, which is trading right now close to 49,000 as I'm talking to you. It has to get through 51,000, but right now looking pretty darn good. No real motion indicator here. So I think this was very forward thinking of her. Of course, if it breaks down under the 50, that would be a different story. But for now, after it had this sort of peak high and made a good 10% correction, we want to see this get back up. Maybe we'll take a look at it more around 280, 282 as a good place to take some profit. She's also in the new issue of Robinhood. Now, Robinhood, she probably bought the day of, so that's good. I'm not sure if she added to the position. Of course, it's so new, we don't have any major moving averages, but they reported earnings. And even though their earnings, basically, the revenues mainly came from crypto, they had $233 million that they made in revenue from crypto trading as opposed to 5 million from a year before. Nonetheless, the stock is having some trouble. So 40 to me would be the interesting place to see the bleed stop. Then I might look for some kind of level of confirmation to see that it's going to hold. And then, of course, if it doesn't get down there, then I would say your next level to get through would be to get back over 50. As far as other smaller holdings, she's got Shopify, also under the 50-day moving average, but it's a weak caution phase because you have a good slope here. But look at how your real motion indicators sort of give you a heads up warning. Once the momentum started waning here, it really told you that the steam was running out. And of course, then it broke the 50 before the price did. And now this is under the 200. So this would be one I probably would not touch at this point. Where would I maybe get interested? Maybe if it drops all the way to 1300, that would be a big drop. I'm not sure where Cathie is long from, and it's irrelevant. I just wanted to show you what her portfolio is, and then we can make our own trading decisions on the basis of that. Next one here is Twilio. And this is also to technology. Again, another possible 60-day low here, but again, inside day. So we would have to take out the high of yesterday, 347.73. And then, of course, you've got the 200-day moving average, and look at your momentum. So I'm not all that crazy about this at this point. However, if it did get back through the 200, at least you'd have a decent risk. This has some work to do. So if you're looking at some of these things, you can say, wow, so far Burry seems like he's right. Now, especially if you look at Spotify. Now, what's interesting about Spotify is not only has it really gone down and gotten killed, but we did have a 60-day low here. This was back in May. And from that low, we yielded a move from basically 220 all the way to 280. So that wasn't a bad move, $60. Now we're getting another reversal pattern coming in as I'm talking to you today with a new 60-day low. And you can see clearly we're confirming because we're over 208. So if you wanted to get into this, probably had a good 30-minute opening range breakout, maybe you'll get another yield of another $60 from 208 to 68. But it would have to clear a lot of resistance here, not to mention make a better move on its momentum. So I would say 240 right now is probably a more realistic goal. And finally, she's also into Palantir. as are we, which is having some struggles, sitting here now on the 50-day moving average. And you could see the momentum. We don't have enough information here on the real momentum, but nonetheless, it does look weak below the zero line. And of course, right now, this is really going to have to hold here at these 50-day moving average. Otherwise, we could be seeing another move down, maybe better support down here at around 2150. If that breaks down, I would say I'd give it a little room. If it holds the moving average and can get back over the 200, and especially over today's high, 2450, then I would actually be a buyer. We're buying small positions on all of these things because of the tenuous situation of the overall market. Okay, so now let's take a look now at some of Michael Burry's. Now, he's not all short. He owns Scorpio Tankers. I had brought you Scorpio Tankers ages ago. I was probably one of the first people to buy it. Now, maybe he's long for a long time. I'm not sure, but we've been long out of this stock. I think we took our final profit somewhere here, like right before 20. It flew up more, and now, of course, you can see here it's down considerably. We have not had any kind of reversal pattern. Oil prices are down. That's part of the reason why this is down. This is for oil. And so maybe we'd be looking for a move maybe closer to around 1250. That might be compelling, but I would certainly stay away from this stock. MRNS is another one of his holdings. This is a pharmaceutical company. Not doing so great here, Michael. This thing is really tanking. And again, we would be looking for some kind of level of formation. What is interesting here about this is if you go back here to, this is September, almost a year ago, September 24th, and you go to here, we're actually holding, though, this major gap. So what would be interesting potentially is if it does make a new low, but doesn't fill this gap and then reverses, perhaps that this would be something for y'all to be looking at. But for now, not quite sure what he's thinking. CVS is another one that he's actually long. CVS momentum has declined. It's actually in divergence, negative divergence to where the price is. You can see the price is over the 50, whereas the momentum is under both the 50 and the 200. We sort of peaked high right here. However, we did get through somewhat of a basing action. So 80 is really an important area for this to hold. And so what I would like to see really is either this get down to 80 and turn back around, or potentially take out this high at 86.73. Then you could risk to the 50, because that would negate this little slight topping pattern. And of course, we'd want to see the momentum increase there as well. CVS is basically giving away for free all kinds of vaccines and tests for COVID. So they're not making any money on that, but it does bring people into the store. He's also long KHC, which is Kraft Heinz. And of course, that's going down because food prices have been going up. But nonetheless, right now, we could be on our way to some kind of reversal. So he may get some kind of a reprieve here, again, not knowing where his position is from. But I would want to see this bottoming out with a new 60-plus day low and still clear over that 200-day moving average. Then you would have a good risk. And again, look at our momentum, which has just been horrible. We're not seeing any kind of divergence or any positive reason to even consider buying it at this point. He's also long Facebook, which is holding the 50-day moving average after having a reversal pattern, though. This can really still go down a little bit more if it breaks the 50, particularly your momentum not doing so great. So this would not be necessarily one that I would be looking to buy at these levels. I much rather see a move down closer to around 325. Then I feel we have a much better risk against the 200, which is rising. Or potentially if we can get through this 366.95. So the momentum would definitely keep me out of Facebook. And finally, well, not finally, there's a couple of more longs that he's got that are interesting. Another one is Google. So look at Google. Near the highs, momentum waning. This is not a stock that I would want to be long at these lofty levels, especially with the momentum here not looking so great. But nonetheless, if it took out the high here at 2,800, then that would also negate a little bit of a topping pattern here. and who knows where this can go, but this would not be a favorite stock to be chasing at these levels. I much rather see some kind of correction here. I mean, ideally 2250 would be great. That would certainly not be a great one for Michael Burry. Walmart is another one that he's long. So that one he's done very well. Walmart basically is a consumer staple. And I know we covered this in part of the consumer staples before I left. It was really consolidating for a long time. It was a very good buy once it took out all of this here at 142. And now after you'd had to sit through earnings, it reported well, and you can see where it's holding here, momentum looking good. So at this point now, I would say if we go back with a little history here, we're into some resistance here around this 151 level. But if we can get a good close over 151, particularly if we can get a good close over 151.73, 152, you can have a tight risk to under 148 and see how much more you can get out of Walmart. And NetTap, I thought was interesting because I haven't looked at this one in a while. So look at the momentum, how horrible it is here. And of course, we're breaking down under the 50. So this one is another one I would think is a sloppy chart. And I rather see a move closer to the 200 before I would even entertain buying this, unless, of course, it took out all these highs. So if we're looking at all his longs versus Cathie Wood's all his longs, really, I would say they're almost, from basically not doing this scientifically, but just from, you know, watching what we just covered, they're both really have some good winners and they have some serious losers. They may be kind of neck and neck in terms of this battle at this point. Now let's take a look at some of his shorts. That's how we're going to wrap this up. ARK is what he is short. Now, ARK is actually the fund of Cathie Wood's. So he sold it. I think he sold it about a week or so ago. So right now he's looking good on that. How is this looking overall as an investment fund? Momentum is down. It's underneath both moving averages. This is definitely not in a good phase right here. It's a bearish phase because you see the 50 cross below the 200. So right now this is bearish. If we take a look at this on a weekly chart, I just want to see if it broke down under the weekly. It's just now breaking down under the 50-week moving average. So this one, I'd say right now, Cathie Wood's portfolio looks more in trouble than she would like to admit maybe at this point. Even with some of her winners, the overall losers are dragging down her overall fund. So perhaps Burry's going to be right, but I'd be curious to see what happens at around 100. And of course, if it can get back through the moving averages, that would be a good sign all around for the market. He's also short TLTs. But he's short TLTs through the TBTs, which is the ultra short ETF for TLTs. So he's banking on inflation that interest rates are going to go up. Right now, we're actually long TLT, so we're on the absolute opposite side of him, partly because of this reversal pattern here, which you're going to, let's go back to the TLT. The reversal pattern that we had here, which wasn't really a 60-day, but how it broke the moving averages and then gapped up the next day. We got in right on this day right here, and we have a no loss stop. To me, if it holds around 149.50, 150, that actually is a good sign for yields. You can see we had a topping pattern here. Ultimately, we'd like to see this take out this 152.52. Like I said, we have a no loss stop. But look at your momentum. It's doing pretty well here. So if we just take one more look at Michael's position of being long TBTs, right now, he's not doing so great. So he's banking on inflation looking out, and I agree with him. But because the market's been under stress, we've seen the TLTs actually doing well. So I'm not sure he's really thinking about this correctly. There's going to be a long way before the Fed raises the rates. They're looking at inflation being transitory still. And so he thinks that it's going to get so out of control that the Fed will have to be forced. I think he's well ahead of himself, just like I think Cathie Wood is well ahead of herself in terms of some of this disruptive technology, especially as some of these stocks have been so overvalued, as has the stock market in general, many calling for a correction, which right now the Fed is basically keeping the market up. I do, though, support her position in anything crypto. So let's just take one last look at Tesla from Michael's eyes as a short. And like I said to you before, he may be right. If we break down under these moving averages, particularly if we break 650, it's a good possibility we'll see about $100 lower from there. That would certainly hurt Cathie's position, although she's reduced it. And I have no idea where he plans to take profits or if it even trades like that. But nonetheless, that would be really where I would look, is either under 650, looking for a move to 550, or over 700. And Michael turns out to be wrong. Okay, I hope this was fun and helpful to you. You all have a really great day. Thanks so much for watching, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.